Welcome back to the Deep Dive. Today, we are not just talking about money.
Oh, we're definitely talking about money.
Okay, yes, we are talking about money, a staggering amount of it. But really, we're talking about trust. We're talking about fear.
And we're talking about a fundamental psychological shift that is, I think, currently rewriting the economic social contract of an entire nation.
That is a very dramatic way to open, but you know what? In this case, I think the drama is entirely justified.
I agree, because the numbers we are looking at today, they aren't just statistics on a page. They are a message.
They're a scream, honestly. So let's start with the number that triggered this entire investigation.
Go on.
It's a number that, when I first saw it in the research stack, I honestly thought it was a typo. I thought surely they added an extra zero.
It's one of those figures that is so large it becomes abstract, almost meaningless.
Right. The number is 250 trillion, specifically 250 trillion South Korean won.
Which, to translate that into the currency that is really the protagonist of today's story, is approximately 171.8 billion US dollars.
And just to set the stage for you listening, because 250 trillion is a hard number to visualize. This isn't the government's foreign exchange reserves.
Right.
This isn't the war chest of a massive conglomerate like Samsung or Hyundai or, LG.
Not at all. This massive mountain of capital represents the U.S. stock holdings of individual Korean investors.
The West Ants.
The West Ants, or Seahawk Ants, exactly. This is the money of regular people salarymen, IT workers, retirees, as of the beginning of 2026.
It really is a historic milestone. But what makes this a deep dive topic isn't just the size of the pile.
No, it's the velocity.
The velocity is how fast that pile is growing. If we look at the data from the Korea Securities Depository, the speed at which this capital is leaving the Korean peninsula and landing in U.S. markets, it's accelerating at a rate that is frankly alarming for policymakers.
Very alarming.
Right, because looking at the timeline, this didn't happen over a decade. This isn't a slow drift.
No, a landslide is the perfect metaphor. Let's trace the trajectory to give some context. At the end of 2024, these holdings were around $112.1 billion.
Okay, still a huge number.
Huge number. But fast forward just 1 year to the end of 2025, and that number jumped to $163.6 billion.
So that's a $50 billion jump in 12 months? That's huge.
It is massive. But here is where it gets really interesting, and this is the hook for today's deep dive.
Yeah.
We are looking at data up to January 15th, 2026.
So just the first 2 weeks of the year.
That's it. In just those first 15 days of 2026, that figure grew by another $8.2 billion.
Wait, hold on. Let me just pause there for a second. $8.2 billion in 2 weeks.
2 weeks? That pushed the total to that $171.8 billion mark, breaking the 250 trillion won barrier for the first time in history.
Wow.
And you have to think about what that means. That is money that is effectively exiting the domestic circulation loop. It's not buying Korean real estate, it's not sitting in Korean savings accounts, and it's not funding Korean startups.
It's flowing directly into the veins of the American economy. So our mission today is to figure out why. Because we aren't just talking about people buying a few shares of Tesla because they like the car, or Apple because they have an iPhone.
Yeah.
This feels bigger. It feels systemic.
Well, it is much bigger. This is the core of our analysis today. We need to explore why Korean investors are not just investing in foreign stocks in the traditional sense of, diversification.
Right.
They are actively moving the very roots of their assets into the U.S. dollar.
It sounds less like an investment strategy and more like an evacuation plan.
That is a very apt way to put it. We are defining this phenomenon as dollarization. And the sources we are looking at today suggest that for the individual investor, this is no longer about maximizing profit in the traditional alpha-seeking sense. It has become a survival strategy.
Okay. And while the people are moving their money out, the Korean government is, well, frankly, panicking.
They are frantically trying to lure this capital back in.
So today, we're going to break this down into 4 segments. First, we'll get into the mindset. Why is the ant dollarizing?
Then, the anomaly. How this behavior is literally breaking the old rules of economics.
After that, we'll look at the government's desperate countermove, this new policy called the RIA.
And finally, we'll ask the big question, will any of this actually work? Is it too little, too late?
It's a fascinating case study in behavioral economics versus government policy.
Absolutely.
Okay, so let's get into segment 1. Let's unpack this survival equation, because I think to understand the macro numbers, that 250 trillion won, We have to understand the micro.
Absolutely. You have to get on the ground. You have to look at the human beings behind the buy orders.
We have this fascinating profile from the source material of a guy named Kim Jin-woo. He's a 34-year-old IT worker living in Panyo.
And for our international listeners, Panyo is essentially the Silicon Valley of South Korea. It's south of Seoul, full of tech companies, gaming studios, startups.
So Kim Jin-woo, he isn't a novice. He's likely very financially literate. He's plugged into the trends, and he understands how digital platforms work.
He's the demographic that should be driving the future of the Korean economy.
Exactly. And his routine is, well, it's mechanical.
Right.
Every single payday, when that deposit notification hits his smartphone, he takes half his salary, about 2 million won, and immediately converts it into US dollars.
And this is the crucial part that really stood out to me in the report. He does this regardless of the exchange rate.
Right.
Yeah.
That's the part that's so counterintuitive. The source mentions the exchange rate is sitting at a steep 1,471 per dollar.
Which is historically very expensive.
Yeah, conventionally, if you are a traveler or a casual trader, you'd look at it 4,470 and think, ouch, the dollar's too high. I'll wait for it to drop back down to 1,200 or 1,300.
That would be the rational buy low approach. But Kim, he buys anyway. He buys at the top.
Why? I mean, what is his logic?
His logic represents a fundamental shift in time preference. And this is a direct quote from him. He says, "The dollar is expensive today, but it will be more expensive tomorrow."
Expensive today, but more expensive tomorrow. That is a heavy statement.
It is a profound statement of no confidence. It tells us that he has completely lost faith in the purchasing power of the won over the long term. He isn't speculating on a weekly fluctuation. He is betting on a secular decline.
He explicitly says he treats the won as currency for consumption, for buying coffee, paying for lunch, paying the subway fare.
Right, the daily necessities.
But the dollar is his currency for asset storage.
This is the classic definition of dollarization you see in emerging markets, but seeing it in a developed OECD economy like South Korea is what's so striking. It splits the financial personality of the consumer.
What do you mean by that?
You earn in local currency because you have to. You spend in local currency because the shop demands it. But you save, you store your value in a foreign currency because you trust it.
It's like the one is a melting ice cube in his pocket. He just wants to trade it for a rock before it completely melts.
Exactly. And it's not just the 30-somethings in tech who feel this way. The sources give us another profile, Yang Mayong-san. She's 27, just entered the workforce.
And her perspective is honestly a little heartbreaking.
It really is. It speaks to a sense of futility that I think a lot of young people globally might relate to. But here it has a specific currency flavor.
Right. She talks about this feeling that even if her salary goes up, she gets a raise, if the value of the won drops, she feels like she's running on a treadmill. She's not actually getting ahead.
She uses this very direct quote. She says she feels like the value of my labor is evaporating.
That phrase, evaporating labor value, that's critical, isn't it?
It signals a deep crisis of confidence. When young investors, people just starting their careers, view the weakness of their national currency not as a fluctuation, a temporary dip that will correct itself, but as a constant, a permanent state of decline, their behavior changes permanently.
It stops being about investing, in the sense of growing wealth, and starts being about just protecting what little you have.
Precisely. If you believe your labor, your time, your effort is being devalued by the currency it is paid in, the only rational move, the only way to preserve the sweat equity you put into your 9-to-5 job is to swap that currency for something stable immediately.
And that explains why we're seeing this rush to the dollar despite the high exchange rate. They aren't trying to time the market.
No, they're trying to exit the burning building.
And just to drive home that this isn't just nervous young people or doomers on the internet, the sources also point to the very top of the food chain. We have this anonymous CEO A.
Right, the head of a domestic financial company.
Someone who runs a Korean financial firm, a captain of industry. And even he admits that he keeps most of his own personal financial assets in dollars. He only holds a few domestic stocks.
And his rationale is very, very telling. He says, and I'm quoting here, "Doing business and investing solely in won involves too much risk."
That is just wild to me. When the captains of the industry are hedging against their own currency, what does that tell the average person on the street?
It validates all their fears. It signals a deep structural distrust. If the CEO of a financial firm thinks investing solely in won is reckless, why would a 27-year-old new hire think any differently?
It creates a feedback loop, doesn't it?
A very dangerous one. The smart money is moving out, so the West ants follow, which weakens the currency further, which proves the smart money was right all along.
So we have established the mindset. It's fear, it's preservation, it's a loss of faith. Now, let's look at how this is breaking the traditional rules of economics in segment 2, because usually markets have a self-correcting mechanism, right?
They do, or at least they're supposed to. The traditional economic rule regarding foreign currency deposits is pretty simple. Buy low, sell high.
Right. So usually when the exchange rate is high, meaning the won is weak and the dollar is strong, people who hold dollars would say, great, I can sell my dollars now and get more won back than I started with.
Exactly. If you bought dollars at 1,200 won and now the rate is 4,470, you sell. You take that profit. You convert back to won to cash in on your gains.
And that selling pressure on the dollar helps stabilize the exchange rate. It's a natural buffer.
It is. It's supposed to bring things back toward equilibrium.
But the sources are saying the exact opposite is happening now.
We are seeing a complete anomaly. Despite the rate hovering around that 4,471 mark a level that historically triggers massive profit-taking people are hoarding dollars. They aren't selling. They are accumulating more.
The data backs this up pretty strongly. There's this metric, individual resident foreign currency deposits.
Yes, and that hit a monthly high in November 2025. It reached $15.11 billion.
So that's just money sitting in dollar-denominated bank accounts in Korea.
Exactly. That is about 22.3 trillion won just sitting in deposits, not even necessarily invested in stocks yet. And this is significant because it means investors are interpreting the high exchange rate not as a selling opportunity, but as a warning signal.
They aren't thinking, it's high, I should sell.
No, they're thinking it's high and it's going to go higher. It's a complete paradigm shift.
It's fear over greed.
Absolutely. Fear is a much more powerful motivator, and it's escalating. We are seeing a trend that goes beyond just buying U.S. stocks through a Korean broker. We are seeing what we can only call direct capital flight.
This part of the research really surprised me. We aren't just talking about buying Tesla stock through a Samsung Securities app on your phone anymore.
No. That's the entry-level drug, so to speak. If you buy U.S. stock through a domestic broker, the money is technically still within the Korean financial ecosystem's periphery. The Korean government can see it, they can track it, and they can regulate it relatively easily.
But people are bypassing domestic brokers entirely now.
They are, more and more. According to the 2025 National Tax Statistics Yearbook, the funds reported in direct overseas financial accounts jumped significantly.
Okay, what are the numbers?
In 2023, it was around 8.7 trillion won. By 2024, it had climbed to nearly 11.8 trillion won. And that's just what's being reported.
So this is people opening bank accounts or brokerage accounts directly with U.S. financial institutions.
Yeah.
Like opening an account with Charles Schwab or a Bank of America or something.
Yes. This is what we call capital migration. It's fundamentally different from just investing abroad. It's about burying your assets abroad.
It's cementing the exit. It's a much more permanent move.
It is. It's moving the entire asset base out of Korea. It suggests a long-term plan to keep that wealth outside of the jurisdiction and the currency risk of the Korean won. It's not just about yield anymore. It's about jurisdiction. It's about fundamental safety.
Which brings us to the other side of this tug of war, the government. Because obviously they can see these numbers too, and they must be sweating bullets.
Sweating is putting it mildly. The government is in a state of high alert. You have to understand the macro implication here.
It's a vicious cycle.
Exactly. If everyone sells won to buy dollars, the won gets weaker. If the won gets weaker, imports get more expensive energy, food, raw materials.
Which means inflation goes up.
Inflation goes up, the economy suffers,
Okay.
which fuels more fear, which causes more people to sell their won.
It's a death spiral.
It's the classic currency crisis playbook. So they need to stop the bleeding. They need to bring those dollars back to strengthen the won. But they can't just ban people from buying U.S. stocks. That would cause a riot and destroy Korea's reputation as an open market.
That would be capital control.
Mm-hmm.
And that would just scare investors even more.
Way more. So they have to use honey instead of vinegar. They have come up with a plan, a carrot.
Which brings us to segment 3, the RIA.
The domestic return account, or RIA for short.
Think of it as a tax incentive, a very specific one designed to lure that capital back home.
Okay, let's walk through how this works because the mechanics are really important here. I want our listeners to visualize the offer that is being put on the table. It's basically a deal.
It is a deal. The premise is this. The government knows you made money on NVIDIA. They know you made money on Tesla or Microsoft or some other U.S. tech giant.
Right.
Usually when you sell those stocks, you have to pay a hefty capital gains tax on that profit.
Right, usually 22%, including the local tax. That's a big chunk. It's a very big chunk. But now, the government says, if you sell your foreign stocks, bring that money back into Korea and invest it in domestic stocks companies like Samsung Electronics, SK Hynix, Hyundai, and you hold it for 1 year, the government will give you a tax break on the capital gains you made from those foreign stocks.
Okay, so I sell my U.S. stock, I take the profit, I move it to this special RIA account, and I buy Korean stocks, and I have to hold it for a year.
Correct. You have to commit to the domestic market for at least 1 year. You can't just move it in and out to get the tax point and then flee again. It's a lock-in period.
And what's the limit? I assume I can't do this with billions of dollars.
No, the limit is up to 50 million won per person in sold amount. So we're talking about roughly 34,000 US dollars. That is the amount eligible for the deduction.
So it's really targeted at the middle class, the ants, not necessarily the ultra-wealthy tycoons.
Exactly. They're trying to reverse the retail trend.
50 million won, okay?
Okay.
But here is the kicker, and this is the part that shows how worried they are. There's a timer on this, right? They are trying to create a rush.
It is very time sensitive. The government knows that psychology is momentum-based. They need to break the momentum of dollarization now, not in 6 months. So they have structured this with a tiered deduction rate to encourage immediate action in 2026.
Break down the tiers for us. How does that work?
Okay. If you sell and repatriate in the first quarter of the year, so by March 31st, 2026, you get a 100% deduction on the transfer gains tax for that eligible amount.
100%. So you're saying it's tax-free profit.
Up to the limit, yes. That is the early bird special. It's the maximum incentive to act fast.
But if I do it in April.
If you wait until the second quarter, so from April to June, that deduction drops to 80%.
Okay, still good, but you lost 20% of the benefit.
And if you wait until the second half of the year, it drops all the way down to 50%.
Wow. So they are really saying, come back now, W. They are manufacturing urgency.
They are. They want a flood of liquidity in Q1 to try and stabilize the exchange rate immediately. Let's paint a scenario to make this concrete for everyone listening. Suppose you bought NVIDIA a while back and you've made a nice profit. You're sitting on gains. If you sell it, move that profit into an RIA account and buy Samsung Electronics before the end of March, you pay 0 tax on those NVIDIA gains up to that 50 million won limit.
That is a pretty direct financial bribe. It's basically the government saying, please come home and we'll pay you to do it.
It is. And there's one more layer to this incentive structure, which I find fascinating.
What's that?
They know that people are afraid of the won falling further. That's the whole reason people left in the first place, right?
All right.
So they are also offering tax breaks for FX hedge products.
FX hedge. We should probably break that down for the non-finance listeners. What exactly is an FX hedge in this context?
Sure, FX stands for foreign exchange. An FX hedge is basically an investment product that protects you against exchange rate risks. Think of it as insurance for your currency.
So if I buy Korean stocks, but I'm worried the won will drop against the dollar, I can buy a hedge. If the won drops, the hedge pays out to cover some or all of that currency loss.
Exactly. So the government is saying, come back to the won, and if you buy insurance against the won dropping, we will give you a tax break on that too.
That's almost an admission to the problem right there, isn't it?
It is. It's an implicit acknowledgement of the core fear. If you invest in these hedging products, the government will deduct 5% of the investment amount from your foreign stock capital gains tax. The maximum deduction there is 5 million won.
So if I'm a savvy investor, I can combine these benefits.
Yes. The standard deduction everyone gets on foreign stock gains is 2.5 million won. If you maximize the FX hedge deduction, you get another 5 million. So theoretically, strictly on the hedging side, you could shield up to 7.5 million won from taxes.
And you combine that with the RIA benefits.
Yeah.
The tax savings could be substantial.
They could be. It sounds like they're throwing the kitchen sink at this. They are trying to make the math work in favor of the won. They are using the tax code to fight market sentiment.
They are attacking the problem with the only tool they have left that doesn't involve raising interest rates.
Which would hurt the domestic economy in other ways, like the housing market or household debt.
Right. But this raises the most important question of the episode. And this is segment 4. The analysis.
Will it work?
Will it work? I mean, on paper, saving on taxes is great. Everyone loves paying less tax. If you offer me 100% deduction, I'm listening.
Of course.
But Joe, we just spent the first half of this deep dive talking about how people feel their labor value is evaporating. Can a tax break fix an existential crisis.
That is the so what here.
Yeah.
That is the trillion-one question. And honestly, there is a lot of skepticism among the experts we've looked at.
The source mentions Kim Kwang-sik from the Korea Economic Industry Research Institute. What is his take on this?
His argument is that tax breaks are a Band-Aid on a bullet wound. They treat the symptom, the capital outflow, but not the disease.
And the disease is the lack of trust.
Exactly. He believes that to truly reverse this trend, this dollarization, you need structural improvement to restore trust in the won itself.
Structural improvement meaning what exactly? What would that look like?
It means fixing the underlying reasons why people are leaving. It means things like regulatory deregulation to meet global standards, making it easier to do business. It means attracting foreign production facilities to Korea to bring in more foreign currency naturally.
So bigger picture stuff.
Much bigger. It means increasing corporate governance transparency so that Korean stocks aren't perpetually undervalued, the so-called Korea discount.
So making the Korean economy itself a more attractive and trustworthy place to park capital rather than just bribing people to bring their money back into a system they don't trust.
Right. Think about the dilemma the investor faces. The government is asking them to trade safety, which they find in the dollar, for tax benefits, which are denominated in won.
That's the catch, isn't it? The tax benefit is in won. The whole thing is designed to get you back into won.
Exactly. If I bring my money back for a year to save, say, 10 million won on taxes, but the won drops another 10% against the dollar in that same year because the structural issues haven't been fixed, did I actually win?
Let's do the napkin math on that. If my principal is 50 million won and it loses 10% of its value, that's a 5 million won loss in purchasing power. If I saved, say, 8 million in taxes.
You're barely ahead. And you took on a huge amount of currency risk and stress for a year.
I lost the sleep at night factor.
You did. And in a volatile market, safety often wins over yield. And safety definitely wins over a one-time tax credit.
It's a real tug of war. On one side, you have the individual's desire for a lifeboat, for security. On the other side, you have the state's desperate need for liquidity and a stable currency.
And looking at the behavior of people like Kim Jin-woo, the guy we talked about earlier, who buys dollars every payday no matter what, I don't know if a tax deduction is going to change his mind.
His behavior isn't calculated on a spreadsheet.
No, it's calculated on survival instinct. He's not trying to maximize his 2026 tax return. He's trying to secure his 2046 retirement.
It's like trying to offer a coupon for a discount cruise to someone who's currently building a bunker in their backyard. The motivations are just on different planes.
That's a vivid way to put it. The tax break might sway the marginal investors, the people who were planning to sell their Tesla stock anyway to buy a car or put a down payment on a house.
Sure, for them it's a windfall. Hey, great timing, I'll use the RIA and save some money.
Exactly. But for those who view the dollar as their savings account, as their actual retirement plan,
It's a very tough sell.
it is. Why would you bring your nest egg back into the very environment you were trying to protect it from? Especially if you believe, like Yang Mayong-san, that your labor value is fundamentally evaporating in that currency. A tax break doesn't fix evaporation.
This really highlights the complexity of modern economics. It's not just numbers on a screen. It's narrative. It's trust. It's belief.
And once that trust is broken, once a generation feels that their economic future is safer in another country's currency, it is incredibly hard to earn that trust back. You can't just buy it back with a one-year tax credit. It takes years of stability and growth and real structural reform.
So let's just recap what we have covered today, because we've gone through a lot.
We have.
We are looking at a historic exodus of capital. A staggering 250 trillion won held in U.S. stocks by individual Korean investors.
A figure that grew by over $8 billion in just the first 2 weeks of 2026. The velocity is accelerating, and that's the scary part.
We have seen the psychological shift behind the numbers. The West Ant isn't just speculating anymore, they are surviving.
One is for spending, dollars are for saving. The trust in the local currency has been shaken to its core.
We've discussed the new rules of this economy. People are hoarding dollars even when the exchange rate is high, breaking the traditional buy low, sell high cycle that normally stabilizes a currency.
And they are moving money directly into U.S. accounts, bypassing the Korean system entirely in a move toward true capital migration.
And finally, we have seen the government's response. The RIA accounts, the tiered tax deductions, 100% if you move now, 80% in Q2, 50% if you wait, a desperate, time-sensitive attempt to bring that liquidity back before the end of the first quarter.
It's a fascinating moment in economic history. You have a population that is essentially voting with their wallets, and they are voting against their own currency.
It really challenges the traditional relationship between a citizen and their national economy. Usually, you sink or swim with your country. But technology and global finance have given the ants a lifeboat.
And the government is standing on the deck of the big ship saying, please don't get in the lifeboat. We have some tax-free snacks over here.
That really does sum it up. So here's a final thought for you to chew on as we wrap up. The government is essentially offering a sale on taxes to buy back your trust. They're saying, come back and we will make it cheaper for you.
But trust is a hard thing to put a price on.
Exactly. If the fundamental fear, the fear that labor value evaporates and one remains, will a temporary tax break be enough to change the behavior of the West End? Or are we witnessing the beginning of a new era? An era where the dollar standard isn't just for global trade between nations, but for the personal savings accounts of the average Korean individual.
It is a question every investor listening, no matter where they are in the world, needs to answer for themselves.
Are you betting on a home team? Or are you looking for a lifeboat? That's it for this deep dive. Thanks for listening, and we'll catch you on the next one.
Stay curious.